I went from doing my first ever property deal at 19 years old to now acquiring and building over £10 million worth of property. And primarily that growth was thanks to one key skill that I learned. Now, when I did this first property deal, I saved up every single month for many months until I had enough of a deposit to go and buy that property. And after doing that deal, I quickly realized that if I want to build a meaningful property business, a big property portfolio, that just relying on my own capital, my own cash, was going to take a very long time, because my own capital was a finite resource. I'd invest it into one of these deals, all my money would be tied up, and then if I want to go do more deals or bigger deals, then I'd need to continue to save up. And to build the property business and do the amount of deals or the type of deals that I wanted to do, I realized was going to take many years, if not decades. And so after a long time of studying some of the most successful property entrepreneurs, investors, developers in the world, I realized that the best way to get more access to capital, to allow you to do more deals or to allow you to get into property deals that you otherwise wouldn't be able to with just your own cash, is to go out and find investors that were willing to invest in myself and in the deals I wanted to do. Now, in case we haven't met yet, my name is Tyler Newman. I am a property investor and developer, as well as having a high-end estate agency business where we specialize in the marketing and sale of £1 million plus homes all across the UK. And if there's one question I get asked the most, it's, hey, Tyler, how do I find private investors for my property deals, or where do I find these investors? Which is why in this video, I'm going to share with you a 4-step proven process for finding private investors that can come and invest in you and your property deals. Now, I say this is a proven process, not just because it's the same process that's allowed myself to go and raise multiple 7 figures of private investment, but it's the same process that allowed one of our students, Dean, to raise £300,000 in under 30 days for his new property investment business. And it's the same process that Jamie used to raise £453,000 from private investors, which he then used to go and buy 3 HMO deals. Now, this framework I'm about to share with you is called the 4 levels of finding investors. But just before I dive into this framework, like I said, the most common question I get asked is, hey Tyler, how do I find these investors? Where do I find these investors? Which I'm about to answer. But the question I always throw back at these people is, well, look, if you did find an investor tomorrow that was willing to invest £100,000, £200,000, maybe even more into you and one of your deals, would you know how to utilize that money properly? Would you know how to structure that deal with the investor and deploy that money into a deal and leverage it maybe with commercial financing, and what the legal agreements you need in place, what kind of security you can offer, etc., etc.? And for the most part, most people answer no, they have no idea. And so I'm going to be answering in this video, how do you find the investors? But if you want to learn the full A to Z process of not just how to find investors, but how to utilize this capital, how to actually structure the deal with an investor, after you've watched this video, if you click the first link in the description, you'll be taken to another YouTube video where I explain this whole process in much more detail. So let's get into it. The first level of finding investors is what we call leveraging your personal and professional network. And I call this the low-hanging fruit. Now, the reason I call it the low-hanging fruit is because these people that are 1 or 2 degrees of separation away from you, 1 degree of separation meaning people that you know personally on a first name basis, and 2 degrees of separation is people who you know, who they know, so maybe a friend of a friend. These people already know, like, and trust you, hopefully. And so if they already know, like, and trust you, it makes it a little bit easier to have a conversation with them. And if they have capital, or if they know someone with capital, they're more likely to feel comfortable doing business with you rather than just some stranger you've met on the internet through a LinkedIn message, which we'll get onto. But these 1st and 2nd degree separations, these people that are in your personal and professional network, it's likely, now not for everyone, but it's likely some of these people you're already aware of have some kind of capital behind them. Now, this could be friends, this could be family and extended family, it could be friends of friends, it could be family friends, but this could also be old work colleagues or old work clients or current work clients. It could be people you went to school with. You could look through your phone book in your phone, your contact list. You could look through your Facebook friend list, and you'll start to spot names. You think, maybe they have a bit of money to invest. And actually, most people are pleasantly surprised with how much capital is actually already around them. Now, if you feel like you don't have a valuable network already, don't worry, because we're going to cover different strategies. But also, it's the people within your network, who do they know? And so I'm going to share with you how we reach out to these people in a second. But if you know people that are maybe accountants or solicitors or mortgage advisors, or they work in a professional capacity where their client base and their little book of contacts is going to be valuable, then these are also people that we can approach and we can ask for these warm introductions. And so the first part of this process that I encourage everyone to go through when starting this is to simply just write down a list of names of people that are in your personal and professional network that you think either have some level of money, and even if it's just a maybe, even if you're a little bit uncertain, you put their name down anyway, and you put down the names of people that work in a professional capacity, like an accountant, like a lawyer, people that you're on a first name basis with. And then we want to go and initiate a conversation with these people, which is where people begin to get a little bit anxious. They don't know what to say. They don't know how to position themselves. They start to have these limiting beliefs pop into their head thinking, well, who am I to go and raise money? Which maybe we'll talk about in this video, we'll talk about in a future video of how you can position yourself properly where actually you do have more experience than you probably appreciate. So when it comes to actually reaching out to these people and initiating a conversation, a big mistake a lot of people make is they just come in far too strong. They're messaging them saying, hey, do you want to invest in me and my deals? And that is asking for too much too soon. Really, we want to be progressing the conversation slowly. And the first thing we want to do is essentially fish for signals of interest or expressions of interest, i.e. a positive response from someone saying, I'm open to having a conversation. I'm open to exploring this further. And so we have very specific scripts and we have this entire kind of sales process mapped out, which we give to our students. But initially the messaging is along the lines of reaching out, sending a message, very polite, hey, how are you? We want to personalize it a little bit. But the dialogue we use is along the lines of, I just wanted to reach out and ask, what is your appetite for investments in 2025 or whatever year you're watching this? This message is asking what's their appetite for investments. You're not saying, do you want to invest in me? Do you want to invest in this deal that I have? It's just, what's your appetite? And like I say, we're looking for positive responses. And if you send this message to maybe 10, 15, 20 names that you've managed to come up with, some people I've spoken to able to come up with 50 names or even more, and maybe some people I've spoken to struggle to come up with more than 5, and that's fine. But out of the messages you send, some of them are going to come back and say, hey, not a good time, my cash is already tied up in other investments, so not looking for any more opportunities. But some will respond and they will say something along the lines of, hey, I'm open to hearing more. Or they might start asking questions back like, what's the return? What's the deal? And so if they're asking that question, that's a very positive signal. But we don't want to fall into the trap of trying to then sell the opportunity and text back and say, oh, well, the return's this, the return's that. The whole purpose of this initial message of initiating the conversation is if we get a positive response, we just want to get them onto a discovery meeting. That could either be in person, that could be on Zoom or Microsoft Teams, where really we find out more about them, find out more about their situation, their investment history, their level of awareness when it comes to property. How educated are they, and have they done an investment like this before, and how much capital are they looking to invest? And it gives you an opportunity to really position yourself properly, give insight into your goals, your strategy, the things you're working on and trying to do. And if there's a good fit, well, then we can explore it further. We can even get what we call a soft commitment, where the investor says, well, hey, look, Tyler, I like you, I like the conversation we've had. If the right deal was to pop up or the right opportunity was to present itself, then sure, I have 50,000, 100,000, 200,000 I'd be willing to put to work. And that's what we call a soft commitment. So when you have a solid opportunity, you want to go raise finance for a specific deal, and you've built your right power team, you've got all of the pitch deck and the data room with all the information you need to present the deal properly put together, well, then you can go have that conversation with the investor, and you can then go and see if this is an opportunity they want to move forward with. And so this process is very much just about nurturing a relationship. It's not coming in too strong, selling too fast. And final point on this, the other way to approach someone is you don't ask them if they have an appetite to invest or have an appetite for investments right now. You could ask, who do you know that might have an appetite for investments in 2025? So if you're reaching out to maybe someone that is an accountant that you know, or a lawyer that you know, or they work in a professional capacity where, like I say, their client book is going to be slightly higher net worth or more affluent individuals, well, then you can ask them, who do you know that I should have a conversation with? Who do you know that might have an appetite for investments? So that's level one. Level 2 is what I call getting in the right rooms. So when it comes to raising money and meeting investors, like I say, this is all about building new connections. And I'm a big believer in getting in the right rooms, getting around people that I want to do business with, that I can explore opportunities with. And so you want to figure out, where are these types of investors going to be? Where are people that have money that want to invest in property going to be? Now, of course, they're going to be at property networking events, and property networking events are great. One issue you might find is that 99% of people that are there are looking to raise money, and only 1% of people actually have money they're looking to invest. But you keep going, you keep showing up, you might meet the right people. Business networking events, which aren't just specific to property, are always good as well. Another one is auctions. The type of people that are attending property auctions are people that have money, want to invest it into property, and are looking for a good deal. But if you've ever been to a property auction, you know that everyone that attends isn't always successful bidding on the property they want to bid on. And these auctions, these events, they're hosted at country clubs, golf clubs, hotels, where there's always a bar outside. And so if you go to these auctions and you see the same people going all the time, and you see who's bidding, and you hang out at the bar before and after, and you introduce yourself to people, lo and behold, you might be able to create some opportunity. Another one is joining high-end gyms or members clubs in your area. Me personally, I've told this story before. I train in one of the most expensive gyms in London, the most expensive gym I could find near me. It costs upwards of £6,000 per year. But when I was making the decision to join, I thought, well, one, I never want to be frugal when it comes to my health and fitness, because I know if I lost my health and it suddenly deteriorated, I would trade every asset that I have to get that back. But the second reason is I am just a big believer. One of my philosophies is I will pay whatever price I need to pay to get in proximity of successful people, to get in proximity of people that are playing a bigger game. And where this gym is based in central London, I knew that the other types of people that are going to be paying that level of money for membership are the types of people that I want to be meeting. They are potential investors. And lo and behold, I've met billionaires and people that have sold companies for tens of millions and hundreds of millions, and actually had one person invest in one of our projects, and another recently hit me up saying he's looking to explore investments with me as well. Now, the third level of finding investors is LinkedIn outreach. Now, I personally have a love-hate relationship with LinkedIn. I think sometimes it's very fake and too corporate, and it's not a social media that I find myself spending much time on. But you can really use LinkedIn as a tool for good, because the beautiful thing with LinkedIn is that you can target people based on their area, based on their job description. And so you can connect and message and reach out to all of the high net worth people in your area, the high income professionals, whether that's managing directors, CEOs, finance directors, or CFOs, or partners at certain companies, etc. And you can send them a message. Again, there's specific scripts that we can provide, and there's a right way to do this, there's a wrong way to do this, but you're reaching out to initiate a conversation. And when they connect with you, maybe they're not going to respond to you straight away, maybe they're not going to be interested right now, but by them accepting your connection request on LinkedIn, they're also going to see the content that you put out day to day, week to week. And when they're ready, once they've maybe got some capital in their bank account, sitting in their pockets, kind of burning a hole in their pockets that they want to put to work, well, you're going to be top of mind, and they're going to remember your messages, they're going to have seen your content, and they're going to want to reach out. So LinkedIn is a slow but a consistent way to really build up a list of potential investors that you're nurturing that at some point would look to do business with you. And finally, the fourth level of finding investors, and this is my favorite, and this is really the top of the pyramid, is building an attraction business, i.e. building a brand for yourself. Now, I could spend hours and hours and hours talking about building a brand and utilizing social media, but when you have a brand, i.e. an audience of people online that know, like, and trust you, what you find is you're no longer having to go out and chase people. You no longer have to go out and chase potential investors. Instead, you begin to attract them. They see your content, they get nurtured by your content, they begin to know, like, and trust you through watching your content. And when they're ready, they start reaching out to you. And I get messages all the time. I'll pop some of them up on the screen. People saying, hey, I've got £500,000 I want to invest. I've seen you on a podcast. Can we jump on a call? I've personally raised over 7 figures from social media this way. For me, it's the biggest cheat code, building a personal brand. And the beautiful thing is you don't need a huge audience, because social media is great for two reasons primarily. One, for getting new eyeballs and attention, new people into your ecosystem, getting new people to discover you. But secondly, and I think what most people sleep on or really underestimate the significance of when they're starting out, is that social media is great for nurturing contacts you've already made. And so you might have people in your personal, professional network that are 1 or 2 degrees of separation away from you, or people that you've met in the gym, in the members club, at a property auction, at a business networking event, where they connect with you on social media, and maybe from day one they've just met you, they're probably not nurtured enough, that relationship hasn't been built deep enough for them to feel like they completely trust you and they know you enough to want to explore business opportunities with you. But if they've seen your content on social media for weeks at a time, for months at a time, eventually you would have built up this know, like, and trust factor where they do feel comfortable exploring opportunities with you. Now, building a personal brand and putting yourself out there online, for some people comes very naturally. For other people, it comes with a lot of hesitations and anxieties, and I have very clear kind of processes I take people through to help them overcome these fears, overcome these hesitations, which I've had many friends that come to me where they are literally filled with crippling anxiety over the thought of putting something on social media, but coaching them through the process, and a year, 18 months, 2 years later of their personal branding journey, they're so grateful that they've built a brand because they finally see how much opportunity it's bringing to them and their business. And so the final thing to understand with personal branding and building an attraction business is there is a difference between creating social media content and building a brand. And a lot of people create social media content but aren't really building a brand for themselves. And there's a really key difference there. But we'll save that point for another time. So to recap, you need to learn the skill of being able to find investors if you want to scale a property business, if you want to play a bigger game. Now that skill set needs to be supplemented with the knowledge of understanding how to actually structure deals with investors and how to actually utilize money properly, utilize the funds that you've raised into a actual property project or a property deal and capitalize a property business the right way, which if you want to learn how to do, check the first link in the description where I've got another YouTube video explaining this process A to Z. And then the 4 levels of finding investors. Start with your personal and professional network. This is a low-hanging fruit because there's already a pre-existing relationship. These people that are 1 or 2 degrees of separation away from you hopefully already know, like, and trust you. The second thing is you need to get in the right rooms. Do whatever you can to get around people that are the types of people you want to be doing business with. It's an investment in your network. Number 3 is utilize LinkedIn to reach out again to your ideal avatar. People that are in your location that are high income professionals or business owners, the types of people that will become funding partners in your projects. And then 4th is build your brand, build your digital reputation. And so you don't have to be constantly chasing money all the time, but instead you can use content, the leverage of content that can be watched 24/7, 365, an infinite amount of times, where when people watch your content, they're getting nurtured, they're starting to know, like, and trust you more, and you're not having to go around meeting people all the time. You can have 100 people watch a video in the space of a couple of days, which is much easier than trying to meet 100 people in a day or 2. So build your personal brand. It takes a while to build, but it's one of the most valuable assets you can have. So that's all for this video. Check the link in the description, and I'll see you guys on the next one.